we have to check whether it is related to asset or whether it is related to income. Whether it is related to asset or whether it is related to income. Let's take example. What happens if government grant is related to asset? If government grant is related to asset, how can you represent the same? So there are two ways to represent the same. For simplicity purpose, I am taking horizontal balance sheet, but for our question purpose, for entire IFRS purpose, we will be having only and only vertical balance sheet. Let's say this is your balance sheet. This is your balance sheet. Okay, or let's take an example. You have an asset. This is your credit side. This is your debit side. This is your credit side. This is your debit side. You have an asset of example $500,000. You have an asset, in both the cases, you have same asset of $500,000. In order to support this asset purchase, the government has given grant of example $200,000. The government has given grant of $200,000. Now there are two ways to show your government grant. There are two ways of representation of government grant when it is related to asset. First is that you can show it as a deduction, government grant of $200,000 and show net asset in the books of account. Whereas on the other hand, you can choose not to disturb asset, not to net off asset. Instead, on your liability side, you can show deferred income of $200,000. Here, there are two ways. Either you can show it as a net from the asset, or you can show it as on the liability side as a separate deferred income. Give me a quick thumbs up. Are we good till here? We will charge depreciation on $500,000. This will be $300,000 after netting off. Okay, so we will be charging depreciation on $300,000, and here we'll be charging depreciation on entire $500,000. Charge depreciation. And in our PL, we'll charge as other income. In PL over the useful life of asset. As other income in PL over the useful life of asset. The impact on P&L will be exactly same. The impact on P&L will be exactly same. Let's say depreciation rate equals to 10% per annum. Let's take the depreciation rate at the rate equals to 10% per annum. There are two cases when, first case, government grant government grant deducted from asset, and second case is when government grant is shown as deferred income. So there are two cases. Your example asset, net asset equals to, let's say, what will be the impact on PL? In your P&L statement, you will show depreciation, and the depreciation will be $300,000 into 10%. That is $30,000. Clear? On the other hand, what will happen in PL over here? Here you will be charging depreciation on entire amount without netting off depreciation. That will be $500,000 into 10%. That is 50,000. Correct. And you will be charging other income. That is total deferred income equals to $200,000 into over the useful life of asset. So if we are charging depreciation at the rate 10%, so we will charge other income at the rate 10%. So that is $20,000. This will be added. What will be the net effect on P&L? Tell me net effect on P&L. $30,000. And here also 30,000. Give me a quick thumbs up. Do you understand this? That either of the method you prefer, the impact on P&L will be same. So, impact, this is Swati Gupta, Chartered Accountant.